Feroz Aziz is Deputy CEO of Anand Rathi Wealth, joins us with his take on the markets. Feroz, given what the S&P has said, now they've downgraded the outlook for some of the group entities, but they're saying that they're still keeping the investment grade intact at BBB minus, but are highlighting the fact that there would be cash flow challenges going forward. How do you read into the story, broadly speaking, in terms of what this would mean for investor appetite for this business and other infrastructure businesses in India? Because at the end of the day, if you're getting into the infrastructure story, if you're investing in the infrastructure story in India, you have to bear in mind execution risks and financing risks.
Yes, Tanvi. Let me break down your question into three parts. One is for the group, Adani Group. I personally believe that Adani Group's domestic institutional holding is reasonably low, which I think is positive from an Indian retail standpoint. The foreign institutional holding is also substantively index fund holdings. So whatever you see in terms of volatility is the sale and purchase of individuals and companies and HUFs and partnership firms in India. Largely, that's where the larger portion of the volume comes from yesterday and hopefully, hypothetically, today as well. So what's from an FII standpoint, the Indian perception, I personally think this cannot have large ramifications like you just mentioned for the broader market because you see 168 companies in the small cap index of India, which is 250 stocks, almost 168 companies, in spite of FIIs selling the broader India story to get into China, have had an increase in the shareholding pattern. There are 17 companies where FIIs in the small cap space have increased their holdings almost twice than what they were in the beginning of this calendar year, which implies that the basic outflow which you're seeing from FII in India also is countered by some degree of deep-rooted small cap India investing. Then coming to the infrastructure story, I think if you look at how infrastructure is developing in India more microscopically, you'd be very pleasantly surprised the kind of infrastructure projects in the metro cities which are actually transpiring and they're not as delayed as they used to. The average escalation of price at approval and at completion used to be almost 75%. Now that's come down to 32% because of delays. So execution efficiency has gone up. Is there more to desire? The answer is absolutely yes, Tanvi. But I don't see this as a huge dampener in the long term for India infrastructure story for sure.
Okay, what about the cash flow situation? Because a lot of these infrastructure projects are, debt equity. Obviously the equity component of these infrastructure projects is much less compared to debt. Correct me if I'm wrong. And that debt is raised by either loans from banks or via bond issuances. Now, we've seen that the Adani Group bond prices have fallen, right? They've scrapped their recent bond issuance. This Kenyan project was a 30-year lease, so cash flow will get squeezed out from there. It'll go out of the window completely for that project. So I wonder what that really signals for meeting their financing needs. I know you may not be able to specifically talk about the financial health of the Adani Group stocks, which, by the way, in the reported earnings thus far have been okay. They've reported decent numbers. But broadly speaking, do you not think that that's an overhang for the sector, which would keep investors away?
Yes, definitely it's an overhang on the sector and specifically on the group. There's no shying away from accepting that, point one. Point two, for the sector, long-term impact on the debt side is the capability to raise debt money for India infrastructure projects is not going to be dampened because Indian retail, if you look at the kind of tax-free bonds Indian retail has bought, is massive. And so Indian retail in the form of InvITs has also started participating. India has about 823 lakh crores. That's close to $10 trillion of Indian household savings is there. And there's an affinity towards debt for Indian households. So that's almost 46%, 45% of this is in debt. And channelizing that money, especially when there's hardly lower fiscal deficits, I personally think that channelizing this money to infrastructure projects is going to be the strategy, and I think it'll work.
Okay, Feroz, I am completely out of time. I don't want to make this about Adani. Give us your 30-second pitch on why India looks attractive after the recent fall.
From a short-term standpoint, the FII short positions are 75. India has a regulatory clampdown on short positions, which is very less spoken. So you can't go short unlimited in India from 2020. That creates lower volatility than S&P. Now coming to the valuation, the Nifty earnings has been 9% growth for quarter two, in spite of the headline number saying earnings have disappointed. Small cap earnings have disappointed for sure. So I think earnings have been okay. If you look at the three important barometers for short-term movements, all of them
Sure.
are in green. So I think some degree of buying is not what it is warranted to get in with some portions of your wealth, which is sitting in cash.
Okay, Feroz, we'll have a longer conversation next time. Thank you very much for giving us your perspective on the news at hand and your view on the markets.